Hey, what's good, everybody? It is August 2026. I can't believe the summer is already here. Like crazy how quickly it is going by. I hope you're enjoying your summer. We're getting all into things Surrey real estate today. I want to give you a little bit of a rundown on exactly what's going on with the neighborhood. So you have an idea whether you're in a position to maybe consider selling your home to change locations, change whatever your home looks like, or maybe you're looking at entering into the market for the first time. So we're going to get right into it here. We're going to be using figures in today's video from the home price index, something called a benchmark price or a benchmark value. And what is a benchmark value? Where does it come from? Well, we're kind of to make it easier to explain, we're kind of looking at almost like at averages, but it's not really averages. Averages can be skewed based on what actually sells. And what a benchmark value is what we consider to be the typical home. So it's not a real house, but a benchmark property with what we call consistent features. So as an example, a 3 bedroom, 2 bathroom home like you see on the screen here in a specific neighborhood. And we watch how the value of that changes over time. So I want you to think of it a little bit like inflation as an example. It's kind of like how we would track inflation for properties, whether it goes up, whether it goes down. It's by far one of the best tools we have to really track exactly what's going on in the real estate market. Now, I want to show you this most recent news release from the Fraser Valley Real Estate Board. And the reason I want to share this with you is because just to give you a little bit of perspective about where the market is kind of year to date. Now, it's summertime. Summertime is fairly traditionally a lot slower than the remainder of the year. So, usually when I'm looking at what's happening in the month of August, as an example, really not so much worried about where July might have been or where June might have been. I'm usually kind of curious as where we are this August compared to last August. And we know last August was, or if you've been following this channel for a while, you would know this that last August was not awesome. It wasn't a great month. Last year, generally speaking, from the spring right up until the fall, was pretty rough on real estate values and anybody that was actually trying to sell their property. So jumping right into it here, I highlighted a few things that I thought were interesting. The Fraser Valley Real Estate Board recorded just over, or just under rather, 1,100 sales on its multiple listing service in July, which was a 5% decrease from June and was 9% below the same month last year. So July, which is the statistics package we're looking at today, was actually 9% below July of 2025, which gives you a little bit of an indication of what's been happening in 2026. A lot of people thought 2026 was going to be an improved year. And in fact, in the lower mainland, anyways, this isn't true for all of Canada, but it is true specifically for the Fraser Valley that 2026 has proved to be a much more challenging year in terms of selling properties. And we really haven't seen the values kind of flatten out as much as we thought they might. Now, that all said, we have seen the values slow down. So the crazy bleeding that we were seeing in terms of values at this time last year has really subsided, but nonetheless, they are pretty consistently still losing value month over month, which I'm going to show you again shortly here. Now, seller activity slowed in July with about 2,800 new listings coming to market, which was a 14% decrease from June and an 18% decrease from the same month last year. So less people are actually putting their properties on the market as well, which is relatively fascinating. So this right here, this red line represents what's going on in the Greater Vancouver Real Estate Board. That is Richmond, Burnaby, Tri-Cities, Vancouver, all the way up to Whistler. Maple Ridge is in there. This is what all their properties are kind of doing in terms of pricing. And you can see that they've really kind of flattened out over the last few months. There's going to be little spikes and whatnot, of course, there is. But you can see the Fraser Valley has actually, kind of continued to trend down a little bit. And it's kind of pointing downwards at not huge changes. This is all the areas in the Fraser Valley, which is like North Delta, basically all the way to Abbotsford. But you can see it has trended down a little bit. It's, you could argue it's kind of flat there as well. But today's video is all about Surrey. So what's going on with Surrey condominiums? Well, the sales to active ratio, which is just the economics of properties that are available versus properties selling, supply and demand at its very finest. We're seeing that in and around about 11 to 12% month over month. So that means about 1 out of 9 properties that are actually coming to the market are transacting, which is pretty consistent for where it's been for a while. You can see that blue line on the graph there is really, if it was a straight line, you had to draw a straight line, it would look pretty much right across that, maybe 10% mark. Now, the red bar that you see on the screen there for the remainder of these slides, that's representing what we consider to be a balanced market where there's no advantage to either party. So with 1 out of 9 properties transacting, that, excuse me, that puts us pretty clearly into a buyer's market. And when we see properties or product types in that sort of market condition, usually it's going to put downward pressure on prices because buyers have more time to shop. They don't have to jump on things right away. There's lots of competition. So sellers are trying to woo them with upgrades and improvements, and of course by price, which is usually the biggest tool that they can use. So you can just see the let's be frank, the decimation of real estate values since really about the spring of 2025, as I was saying earlier. And how does that translate into numerical value? Well, last month it was about a change of about $4,000, 4142, down month over month, and year over year down $52,940. So pretty substantial numbers that we're looking at there. And of course, that is a market that is highly in the advantage of buyers. And a lot of this is driven by the North Surrey market. The North Surrey market, more specifically, probably than any other area in Surrey, because this is Surrey. Surrey is a big municipality, but North Surrey has a lot of condos for sale, and it's been very, very challenging to get rid of them. When you look at other areas of Surrey, it's not quite as pronounced as that. So definitely don't want to paint all the submarkets with the same brush. It really depends on the neighborhood that you want to live in because they're all different. But a lot of that number is coming from the North Surrey condo market. So this is clearly an advantage to the buyers. If you're buying a place, if it's not priced well, you should expect that you should have some very, very strong negotiating power. But there's some really good opportunities out there right now. Anybody that did not sell their condo a year ago because they thought things were going to improve are kicking themselves right now. It's not to say it couldn't get better later on, but certainly year to date, it has not been favorable for them. This is a pretty optimal time to be a buyer. And the reason I say that, and hit me up in the comments of the video if you disagree with this, but uh, oftentimes I think about what the ideal conditions might look like to actually purchase a property. And I wonder, would you want lots of inventory on the market? Would you want sellers a little fearful that their property is going to be worth less tomorrow than it is today? Would you want lots to choose from? Would you want the ability to not have to jump on a property immediately so you can do your appropriate due diligence? All these sorts of things, and to me, that's really what the optimal condition is right now. And if we change conditions a little bit, so let's say the market was starting to improve and sellers were a little more optimistic that things were getting better, they could kind of see the horizon a little bit better and see maybe some progress there in terms of sales picking up, prices picking up. Could you still negotiate a really good deal on a condominium? And hard to say, right? We don't know until we get there, but I think the conditions for actually buying a property is about as optimal as a buyer could wish for. Of course, the fear, let's be frank about what the fear is. The fear is that the market's going to be worth less tomorrow than it is today, which is realistic. I mean, we don't know what's going to happen, but it's always fascinating to think about, especially if you're somebody that's in a rental situation right now and you're just simply not paying anything towards equity or anything like that. Sellers, if you're trying to get rid of a condo right now, my goodness, it requires the appropriate price and it requires hustle. You need to be putting your property in front of the right people who are going to actually be interested in buying that place. And you've got to roll out the absolute red carpet when people come to visit in a variety of ways. So we're talking marketing, we're talking pricing, we're talking about how your place shows, all that sort of stuff. Jumping into townhomes, you're just below a balanced market here. So in and around kind of like the 14 to 15%, which is about roughly about 1 out of 6 properties transacting. And that has had downward pressure in the last couple months on townhomes. So you can see what's happened here with the pricing. And month over month, we're down $8,594. And year over year, we're down $64,461. Again, market highly advantageous towards the buyer. Activity just did go below the balanced mark. So you can see for a while it was actually floating in the balanced territory. But it is now below that balance marker and prices have responded appropriately. I've talked many times about this being the missing middle of the market. So I do believe this will be the market that continues to perform better than most. And in fact, that has been true month over month for almost the last year, simply because the millennial generation who's having kids and needs more space and also has affordability challenges, even though the market is getting more affordable every day seemingly, these are the perfect types of properties for them because of what they offer. So it'll be interesting to kind of keep that in sight, as well as recognizing if you're a young family and you've been holding off on buying, again, how much money are you putting towards rent each month, even year over year. As an example, $64,000. I don't know what rents are right now. That's not my specialty. My specialty is selling residential real estate, but I would imagine to rent a townhouse right now, you're probably looking anywhere between $2,500 to $3,000 per month. $3,000 per month over the course of 12 months. Well, you do the math on that, right? So interesting to think about nonetheless. Now let's get over to Detached here, see what's going on with Detached homes. And Detached continues to be one of the more challenged. I mean, it's certainly condos and Detached that have been the most challenged. Detached is really fascinating that it's been so challenged. I remember my dad saying to me when I bought my first house is there's only one thing that they're not making anything more of, and that's land. And I really see this as a blip in time where buying real estate is just uncool. It's not the smart investment, and I think that's really going to sting a lot of people long term if they continue to hold that thought, because there is such good opportunity out there right now to get into a detached home, to jump up from a townhouse into a detached home. But to each their own. You got roughly about 1 out of 10 of these properties selling right now, and that's had a lot of downward pressure on prices. Now, Detached, dollar for dollar, has actually been affected the most out of all of these different product types. So you can see last month it's down about $20,049 for the benchmark price, and year over year you're down 143,160 or $143,066 year over year. Now, again, advantage to the buyers. There's tons and tons of inventory, just like the condo market, to choose from. Sellers do need to respond to pricing. They do need to respond to the market challenges. Otherwise, they simply get to keep their home. And holding on to some price that doesn't exist, that the market's not willing to pay, doesn't make your home worth that amount. It just means you are the only person that's willing to pay an exorbitant amount for your property. Therefore, you get to keep it. So if you are someone that's trying to sell your home, you want to keep that in mind. If you really truly need to sell, you need to have it in the right position. Prices are going to remain challenged for now, just like condominiums. When you're in a market where your sales to active ratio is 1 out of 10 properties selling, that does not change overnight. It takes time for that to improve. So I don't see that necessarily changing anywhere out there. And if you're a buyer, go ahead and put your offers out there. Now, I did want to talk a little bit about kind of what's driving the market right now as well. Of course, we've got a Bank of Canada rate announcement coming up on September the 2nd. And I've got a fascinating slide I'm going to share with you here. This was actually sent to me by one of our mortgage broker partners. And I really appreciated this because I think this is somewhat interesting for anybody that is kind of making decisions based on what they think is going to happen with mortgages. And we're in this environment where we tend to think that mortgages are expensive, and historically speaking, that's simply not true. Coming out of COVID, that may be true, but historically speaking, mortgage rates are pretty in line with where or on sale compared to where they've been historically. Now, anyways, this is where I thought this was interesting. Is you've got all of the major banks on here, or the major banks, I would say. There's arguable, maybe there's some other ones, but you've got the major banks on here, and these are their economists and where they are projecting the Bank of Canada's rates to end up over the course of the next year and a bit. And you can see all of them, with the exception of TD and BMO, all are projecting by Q4 of 2027 that the rates are actually going to be anywhere between zero point 0.5 to even a full 1% higher than where they are right now. That's the Bank of Canada, of course. So it'll be very fascinating to see how that plays out, because I mean, hey, there's a lot going on in the world right now, and that's kind of what I'm going to talk about right here is market drivers, right? So when it comes to what's going on, we got the Bank of Canada announcement on September the 2nd. Economic shifts, we've got this big August 19th trade deadline with the US. So we're all waiting to hear on that, what's going to happen with that. We know the demand is there, but again, I said a little bit earlier, it seems to be somewhat uncool to buy real estate right now. I think a lot of people are going to regret that long term, but how the public is feeling about buying real estate, that makes a difference. Their interpretation of where the market is and what's happening is going to make a difference. We are in the summer months, so it is expected that it is a little bit slower during these months. A lot of people kind of slow down, maybe pull their homes off the market and really wait till the kids are back in school till they kind of pick it up again. So that's not abnormal. And local policy changes. The BC government has been pretty silent for the last little while, and that's largely likely because of what's happening to property values. They don't benefit from properties not transacting. And it'll be very fascinating to see what ends up happening with pre-sales, what happens up happening with things like foreign buyers taxes, what ends up happening with how they get condominiums and properties moving, because condominiums are the start of the domino that knocks down a lot of the other property sales, because first time buyers enter the market, they don't have something they need to sell. They can enter the market, they can start off a whole train of transactions. So it'll be very fascinating what the BC government chooses to do. There's a voting base of theirs that do enjoy the property values coming down, but they're not making a lot of revenue from lack of transactions due to the property transfer tax that you pay when you buy a new property. So it'll be very fascinating to see if there's any new things coming up in terms of what's going on with local policy. Anyways, guys, I hope that all works. If there's anything, or not that all works, I hope that all makes sense. If there's anything that you'd like to see in these videos that would help you make better decisions as you go through your buying or selling journey, throw it in the comments down below. Share this with anybody that you know that might value from it, and we'll look forward to seeing you next month because you subscribed, right? All right, enjoy your